The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 4th Fireworks Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one and an extraordinary weekend. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the market, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here and that I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044, because this is Fantastic Friday. Of course, it is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 343 points at 17,821. The S&P is up 37 points at 2,086. NASDAQ Composite up 93 points at 5,130. The Russell's up 11 points, trading at 1181. Gold is up $22. Silver's up 46 cents. Light sweet crude down about $1, trading at $40.11. To the upside, you've got Regeneron Pharmaceuticals up $21. Ulta Salon Cosmetics up 12.5%. That's $21. Priceline up 19, Intuitive Surgical up 14, Google's up 14. To the downside, you've got Cooper Companies down 9%. That's off $13. Chipotle down $13. Canadian Pacific Railway down 5. Polaris Industries down $4 out there. So, those of you who listened to the show yesterday, there's absolutely nothing that's taken place in the market that you didn't anticipate. How is that for a show then, right? We took a look at the show. We took a look at what the market was doing. We said, not so fast, right? We took a look at two things that gave us one thing gave us an 80 to 90% probability that the market was going to bounce or bottom. This is a pretty good bounce or bottom, I'd have to say, with the market being up 355 points out there. So that should assist anybody from a day trading standpoint out there. Well, let's go take a look at, let's start off and take a look at what the markets have done for the week. This is kind of interesting, if you want to take a look at it this way. Here's a weekly chart that we'll put up on our screen. The Dow is actually only up about 10 or 15 points at this stage. We opened up the week at 17,802. Right now, we're trading at 17,834. So we're up 32 points for the week. Nice wild ride inside the markets. You'll see the same thing, really, with regard to the other markets. Let's put the SPX up here. S&P 500, a little bit narrower range. The open was 2090. Right now, we're trading at 2088, basically. So you've got a 2-point move change, really, from Monday to Friday. Now, Friday's not over, obviously. It's only 1 o'clock in the afternoon, but it just kind of keeps things in perspective. Now, the reality is, if we just change this from a weekly, this is the S&P that you and I are looking at, to a yearly chart out here, take a look at what we've done really for the year inside the S&P 500. Not much. The open on January 2nd, 2059. Right now we're trading at 2088. So we've seen about a 30-point move, something like that, in the last since January 2nd. The point is that we are in a sideways trading range market out here. Sometimes a fairly large range, and it is a range that the most important thing that you can do at any point in time in trading is understand the market that we are in. Now, many people might say this is a very volatile market. The reality is it's actually fairly quiet. If we take a look at the volatility index, it seems like it's volatile. One day up 300 points, and the Dow next day, down 300 points. But the more important aspect is it's really just this trading range and sideways movement out there. So, and that, what does that mean? That means really what you should be doing if you are a trader is you really should be looking, you should be nimble, and you should be trading shorter term charts. And you need to understand all these other patterns that are inside the marketplace, such as the ones that we took a look at yesterday. I see a comment in the den says Draghi did it. Don't know what the other elements were out there, but the reality is you and I were talking. We had a call from Greg in California, I believe it was yesterday. And a number of other folks. I got people in the that sent me emails saying thank you for what I shared yesterday about the probability of the market putting in a bounce or a bottom out there. You've got to pay attention to those signals and not get caught up in, hey, guess what? The market just sold off. It's going to get creamed. It's going to continue moving lower. You also can't get to have exuberance to the upside. It's just not there. You've got to pay attention to the patterns. So what patterns are out there? I don't know. Let's go check and see. Let's take a look at, we were looking at the 5-hour chart. So let's go ahead and take a look at this. Let's look at the ES mini out here. And so you're going to have to bear with me. Looks like the system here is just a little bit slow. Now, this morning, yesterday afternoon at the close, it doesn't matter whether you're using if you're using a 30-minute chart or a 3-hour chart, you really got the same type of setup here. We had this nice little hammer candle that had formed at the close of the contract session yesterday. This is the ES mini, the same thing taking place inside the NQ. What's a hammer candle mean? Well, it typically means that buyers and sellers are trying to hammer out a bottom. And so you want to pay attention to that level. Now, this morning, as price was moving during the 8:30, 9 o'clock session. Wow, this thing is so slow. I can't even get my. What a bummer! What a bummer out here, right here. So on this big old, huge, large bullish engulfing candle, this session here doesn't end until 2 o'clock. So we got about another 45 minutes. But at 9 o'clock this morning, the jobs report out. We saw the market kind of push. In the overnight trading, the Dow had gotten up about 77 points. I think the ES mini about 10 points, and it went ahead and kind of pushed down to a slightly lower low, created this little price relative strength divergent pattern. Doesn't really matter. The key level, as a mere fact, is it's going to close above 2,082.75. as we come into the 2 o'clock session. And that's an important level to be watching, your 2,085, so it's about 3 points away right now. Look, if the market takes out those highs, the highs from about 4 o'clock in the morning, this is back a couple of days ago, December the 2nd, what the market's going to do is start another leg up. I don't know whether it's going to do that or not at this stage here. It's actually been easier to trade some other things other than from a unless you're an intraday trader out here, some other setups that had some better promise for not getting so whipsawed like this market. Those things being gold. So my clients and I, we got into mining trades. I believe it was at the beginning of the week, but I could be wrong on that. So let's just see. What was the date? December 1st. And today's what? December 4th. Yeah, so 3 short days ago, we got the signals. We actually entered 2 trades on the 1st. We entered 1 trade on December the 2nd out there. Because as bearish as everybody was on gold, all of the other signals that I was sharing with them, so tools that I teach for folks to be able to use, it was very clear that if we just simply got rid of all the noise, all the emotion, and just simply buckled down, focus on the charts, and said, here's what it looks like the market is going to do. We went ahead and fired away, took those trades, and obviously with gold being up, actually with gold being sideways yesterday and sort of the day before, they have even then they were moving sideways to higher out there. So gold has, now I was looking at the weekly charts, right? Let's go take a look at the weekly charts here for gold. We'll see that GC, let me put in the continuous contract out here. Now that's the yearly chart for gold, but let me put up the weekly chart. What you're going to see here on a weekly basis is we've got a nice little key reversal weekly session out here. So that's another nice little bullish, a bullish engulfing as well. But last time we had what looks like a key reversal session inside of gold, you try to say that 3 times fast, was back here March 16th, 2015. And we, in essence, saw gold go from a low of about 1141 up to a high of about 1232. Now, so that says we ought to see, now, I don't know if we're going to see that same price movement. We're just going to take this one day at a time. Do I think that gold has put in a major bottom out here? No, not really. I think this is just another trading vehicle, just as if we were going to go trade Walmart. And speaking of Walmart, let's go out to Sarasota, Florida, and speak with John. John, thanks for calling. Thanks for holding. How are you doing this morning, this afternoon?
Very good. Thank you, Steve. How about yourself?
Excellent. Thanks so much for asking. Were you in on any currency trades yesterday? I know you like to trade currencies.
No, not yet. Well, I am, but it's okay for now.
Okay, all right, good.
I have a put on Walmart. So
You do? Okay.
I want to know what's going to happen here.
You want to know? All right, let's go see what's going to happen here with Walmart. And let me put the volume on the screen out here. So this is a daily chart, folks, that we're taking a look at. Walmart having a very tough trading session back on October 14th, 81 million shares to the downside, and it's still trading below that level as we speak right now. On a daily basis, as you're put out, how far out are you? January. Okay. So, levels that you want to be paying attention to inside of Walmart. What you don't want to see it do, John, is really get above 61.47. So that's a number that you want to go ahead and keep an eye on. That's to the upside. If it gets above that, then Walmart could really get all the way back up to where it broke down back on October 14th. It would be just the opposite. It would be like trying to buy an equity that had broken out, and you want to buy it on a pullback. In this case here, we're just flipping it around. Where did it break down from? And the breakdown was really from 67.95. Now, I use that 61.47 level for two reasons. If we just simply take a look at both the last swing point, the most recent swing point out here, which was on November 20th, as well as if we take a look at the daily TAS market profiles, the point of control is closer to the top of the box. That says that there should be sellers that should be lined up there. And just like any battle or war, if those guys get overtaken, then that says that price moves to the upside. Your question was, what can you expect to the downside out here? And so if, in fact, Walmart continues to move lower, then the next area to be paying attention to would be down around the 48 level. But what I'm going to show you here, I'm going to turn off these profiles, John. And what we're going to look at is the last time that Walmart had any volume. And interestingly enough, I'm going to draw a line on the screen. It happens to be really right where Walmart stopped in price. Now, not exactly, but really close. 57.18 is the number. And the volume on April 23rd, 2012, or the week that began April 23rd, was 129 million shares. And price came down there and is tested that was 60, 49, 46, 76. It's actually saying that it doesn't have enough to push it down much further than that. So that's going to be a tough level for Walmart to actually move through. Not saying that it can't, but you've really tested that level on light volume. Doesn't mean that it has a lot of upside action, but downside, you've really got to bust that 57.18 level out. Does that help you?
Yes, it does.
Or do you have more questions?
No, that'll do it. I appreciate it.
Okay, that was John in Sarasota. That was taking a look at Walmart. And thank goodness we went and looked at the weekly chart. When we get back, we're going to go to Fort Collins and speak with Mark about the VIX. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go out to Fort Collins, Colorado, and speak with Mark. Mark, thanks for calling. Thanks for holding. How are you today?
Good. How are you?
Excellent. Thanks so much for asking. How's the winter out in Fort Collins?
Oh, we got some snow on the ground and the sun outside, and it's going to be a nice 50-degree day, so it should all be gone by the end of the day or by tomorrow.
Now, are you a snow skier?
I do ski a little bit, but not all the time.
Yeah. How close is the nearest run to where you're at?
The nearest places I like to go are probably about 2-hour drive.
Is it? Okay. Okay.
Yeah.
Yeah. Cool. Hey, you want to take a look at the VIX index? Tell me what you're doing or how I can help you.
Well, I was listening to you yesterday, and you talked quite a bit. I know I've listened to you quite a bit, and I know you talk about the 50-day average and where it is in relation to that, and you also talk about 10% moves.
Yes.
So we had a 10% move, obviously upside, way more than that yesterday. And similarly, we're having more than a 10% down move today. So do you expect a reversal of what we're doing today on Monday based on what the VIX is doing, or because it's back below the 50 moving average? Does that change your opinion? What are you thinking?
So it's a great question. Yeah, no, that's a great question, and thanks for asking. So my study over the last since 1971, I believe that's when the VIX might have come out. Or back to when the VIX began. My study shows that the consistency of the VIX being able to help guide what is likely to happen within the next 48 hours, and over the course of the last over a year, probably 18 months, it's been more like within 24 hours, has been when the VIX has a one-day rate of change greater than 10%. versus is not as consistent when the VIX has a negative 10% reading out there. Okay. So, the one where I don't have a problem, coming on the air and the market is, moving down big time with volume, without volume, doesn't matter. And the VIX has got a one-day rate of change greater than 10%. I'll sit here all day long and take the 80% to 90% odds and be able to communicate to everybody out there, hey, this is what you should anticipate. Whether it's just going to happen in the futures market, whether it's going to carry through, it just happens. Now, today's action is more reminiscent of when the VIX responds the next day, as it does today, that it's more of a bottom than it is a bounce out here.
Okay.
But I will tell you this, Mark, just like when we opened up, the market has basically done not a whole lot for the year. We've had some nice wide trading ranges. If you can get on either side of a day or two when the market is moving in one direction. So I really don't anticipate at this stage that this is like, hey, this is it, the bottom's in. We're in a cycle right now where the market moves up through the through about prior to Christmas or just after into the first week of January. And that's what everybody should anticipate. I don't know what the extent of that move is. It is more bullish than bearish for the VIX to be underneath the 50-day exponential moving average. So I would anticipate the following. Assuming that we close, the VIX closes below the 50-day. I would anticipate that the VIX is going to make a move down to about $14 and change out there. You're at like $15.50 right now. And the market only does one thing when the VIX moves lower. It moves sideways to higher. And that's what I would anticipate at this stage of the game. Okay.
Great info. I just wanted to see how that played out because I didn't know if it was the opposite.
Yeah, oftentimes it's so inconsistent that that it's just better to go with what is consistent and just focus on that.
All right, and then do you have time for one more?
Yeah, sure.
So the one index, which actually I'm playing to the long side, which seems to be lagging quite a bit today, is the IWM. Okay. I was wondering what your opinion on that is. I like the look. I don't love the look of the daily quite as much as I like the look of the weekly. I don't know what your thoughts are on that.
If my system was behaving properly, and I don't have this one set of workspaces open, maybe I'll try to do it during a break. I hate to do it during live on the air. So I can't really point to the chart, but I can tell you what it's doing, or what it was doing as of Monday. And the Russell 2000, I like to take a look. Everybody likes to take a look at, or not everybody, but many people like to take a look at the advanced decline line. And I have the ability to go take a look at I've got a created advanced decline line for the IWM. As the IWM was making higher highs earlier in the week and on Monday, its advanced decline line was rising, and it had taken out the highs from, I think it was at September 17th, or that, what was it? Well, both the November 6th as well as the September 17th level. So I still see the IWM is actually pretty strong.
Okay. Yeah, and what's your thought on why it's?
I tell you what, can you hold on through the break here?
Right.
Okay, we're going to come back to Mark and Collins. I'll try to get that IWM chart up for us. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 340 right now. S&P is up 37. We're on the line with Mark in Fort Collins, and we're having a discussion about the IWM, the Russell 2000, of which Mark is trying to play that to the upside out here. So, Mark, during the break, I was able to go ahead and find that chart. Now, the data here is only through Monday, as far as what it was doing through Monday. So let's take a look at what we know from Monday, kind of then track forward as to where we're at and what's going on. So when I took a look at, and during the show, like on Monday, if you would have listened in, you would have heard me say, don't short the Russell 2000. And the reason I was saying that is because the middle panel on my chart out here is the actual advanced decline line for the Russell 2000. And, you know, last week was a holiday week, and so we really couldn't use volumes for the most part to give us any kind of clear signals. And what I noticed was that the advanced decline line, so as the IWM had taken out its previous swing point high, September 17th, and the one I think right around November 6th or 7th, sometime around there, that the advanced decline line was actually rising as well. So that to me, that was a bullish signal inside of the market. If we fast forward to right now, what the message is, And the message here, so I don't have the advanced decline line to know what it's doing. I won't really do that work until Saturday or Sunday. But if we take a look at, another thing I like to look at is the strength of the Russell 2000 versus the 1000. That's the bottom panel on my chart here. And what I don't like about it is now it has now turned down to the downside, meaning that it's underperforming. And in bullish type phases, what you really like to see is you like to see the Russell 2000 outperform, the small caps outperform the, son of a gun. How about that? I take that back. I'm glad that that's really odd. You know what? I'm having some system problems here. So, what's so weird is I saw it just move to the upside while I was talking about that. But, now it's back to the downside. It's not a clear message for me there. What else are you looking at then? In your line of work, what are you looking at that as far as being to the long side?
Well, I was, it looks to me like even on like a weekly, if you look at the wave counts and stuff, it looks like we've at least made a weekly. I'm trying to look at my numbers here. We've at least made a weekly leg B.
Yeah.
Volume seems decent to the upside versus the downside. It's performing about half as well as the rest of the market today. So I was just kind of curious as to if it's a bad place to be, and if there's some reason that if it's underperforming because of maybe the oils, how many like small oil companies are in this index. I'm just trying to figure out what the disconnect is.
Yeah, because of the number of securities that are inside it, I don't think. Let me look and see if this tells us anything here on my link as we take a look at the IWM, because I can't tell you. I don't know off the top of my head, how many positions are in mining or in commodities per se. I know I've heard Tom talk about it, but I still don't even have those numbers. The largest holding, see, it doesn't even, what I'm looking at doesn't really give me any breakdown of industries or anything along those lines, sectors inside the Russell 2000. On my chart out here, it just tells me that the top 10 holdings represent about 3% of the Russell 2000, which is actually the Russell, looks like 1952. There's only 1,952 positions inside of the IWM, at least as of yesterday, which is odd, isn't it?
Yeah.
I have a buddy that we're trying to do a study. He does a lot of real detailed analysis on the number of constituents inside all of these baskets of ETFs. And what we had noticed, what he had noticed, I didn't notice it, he just shared it with me, was back in the August timeframe, prior to the market moving down to the downside, he was noticing that these managers of ETFs were not maintaining, they were reducing the number of constituents, which are supposed to basically emulate the indice that it was tracking, and they weren't doing it, which was really odd. So he was going to try to do some additional work to see if he could go back and take a look at it so that we could try to chart it to understand if it was just some type of anomaly or not. I don't know. If you check back with me on Monday, I'm sure I'll have the advanced decline line up for the IWM. I just think we're in a market here where from the indices side of it, it's as if you've got to trade it just truly day to day and on the shorter term charts. And so, I'd probably pay more attention to what the TF is doing, the futures contract, than I probably would anything else to try to get some type of signals out there.
Okay. It came on quite a bit of volume yesterday, and I'm not sure if it's going to go up on the same amount today. It's kind of starting to lag a little, so just curious.
Yeah.
Okay.
All righty. That's all I've got for you on the IWM, my friend. Thanks so much for listening, and be safe and have a great weekend.
Thanks, you too. Bye.
Okay. That was Mark in Fort Collins. Let's go out to New York and speak with Maria. Maria, thanks for calling. Thanks for holding. How are you today?
Hi, Steve. How are you?
Excellent. Thanks so much for asking.
Thank you very much for your call regarding yesterday for the VIX change and everything. It changed my mind, and I managed to take a bit of profit there.
Oh, perfect.
That's good. But today I'm getting a bit more killed. So I was wondering if you could mention, because if the market stays here more or less in this big, enormous range that we had today, would you consider that if you look at the two candles on the daily, on both on the ES, on the NQ, and also on the Dow, will you consider that as an inside day candle?
So on this, it's a great question, and the answer inside the NQ is absolutely. Let's put the NQ up on the screen for folks, and we're taking a look at the daily chart here for the NQ for Maria. And the nice thing about this, Maria, is that if we come off of the bottom that was formed on August 24th out here, and that low, if we go from that low, we can see that 2 days ago, what the NQ did is it made a 1.272 A to B equals CD to the upside. Mm-hmm. It made that pattern. Oftentimes that can be reversal. It also made that seventh wave move, that letter G to the upside. It also was moving higher on less relative strength out there. And those things combined with yesterday's candle say that the market really should have gone lower. Now, it would have been better for the bears for it to not have had a one-day rate of change of greater than 10%. Just would have been. But that's not the case. Now, the reason why this is so cool for you is you don't really have to, if you're neutral in the market right now, then, because you're asking if this is an inside day, and the answer is that it is. Okay. But here's the thing. If you're so close to the highs from 2 days ago, 47, looks like about 47.39 or so. I gave you the exact number, but I'll have to switch. So from 2 days ago, if that high gets taken out, then the NQs have recycled to the upside, and that suggests that prices will move to a higher level. What's that next higher level out here? Could even be 49.17. I'd have to go back and do some other work out there. But you're asking about the inside day, and so tell me your thoughts behind why you're asking about an inside day inside the ES and the NQ. I'll put the ES up on my screen for folks as well, which is also an inside day. But help us understand what you're looking at there.
Well,
what's your thought process?
I followed a bit one of your seminar about the candles and the reading and everything. I think it was last year, October maybe last year. I can't remember.
Yes.
Anyway,
yes.
So it was a Saturday seminar, and what I retain from this is that basically it doesn't change the trend in the sense that you have an enormous big candle, red candle yesterday, then you have an inside day today. And then if we open lower on Monday, then it means that it's confirming the downtrend. Is it right or is it wrong?
That would be correct. Yeah, that is an absolute beautiful analysis. You could teach that class now, so we're going to send you one of those certificates, so that you can. So that's beautiful. And the reason why I would say that is because until the high from 2 days ago gets taken out, then what is in place as we speak right now, is a bearish reversal setup. We've got, as I say, three patterns that say that should be a top from a few days ago. Now, is that the type, but going against the grain out here, and this is a big one. One of the reasons that we also were able to say, hey, you got to be careful with regard to yesterday's action was because of the Euro-Japanese yen, because of the movement that was inside that. And as we take a look at this is a weekly chart for the Euro-Japanese yen. I'll put it back to a daily time frame. But this currency pair is what is the fuel inside the market's fire out here. And when this currency pair is moving higher, so too is the markets. And if the markets are not, it just means they haven't gotten the memo, but the memo is on its way. The Euro-Japanese yen is kind of stalled today after yesterday's 2.5% move, which was, since 1970 or so, was like the 29th or 30th largest move in one day inside the Euro-Japanese yen. And so it's not unusual for it to pause out here. But it's not giving us a clear message today because it hasn't broken out. Typically, markets don't end on those wide-ranging bar candles, so you would have picked that up from the seminar as well. But if it continues to just have small-bodied candles, yesterday could have been a one-hit wonder. So the cool thing is that you're so close to the high from a few days ago, I don't really think you have to take any action out here. And you can go ahead and follow the lead on Sunday's open or Monday.
Okay. Thank you very much, Steve.
Does that help you? Does that
that's
answer?
great.
Okay,
great
perfect.
answer.
Okay.
Thank you very much for your help. Have a wonderful weekend.
My pleasure, you too. That was Maria in New York, and what a great student who picked up on that inside bar candle, which typically is says that the trend that you just came from is going to stay in place out there. Okay, so gold. We haven't talked about gold, or we started to speak about gold. If we take a look at it, it's up $22 right now at 1083. And the question is, where is gold going to trade to? Or that should be one of the questions out there. And let's take a look at what it's actually done. Let's see if our market profiles. So our market profiles just popped up on our screen out here. Let's talk about what gold has done and what it hasn't done. On a weekly basis, we took a look at that key reversal session. So that's nice. We looked at the last time we saw one of those out there, indicated gold was going to move higher. What else do we know about gold? We know that the commercial traders, large commercial traders of gold, as of last Friday, I don't know where they're at as of this Friday, so about 3:30 or so. But as of last Friday, they had gotten to the least net short position that they have had since 2001. 2015, folks. That was telling us that commercial traders. So if we step back just for a moment, take a look at as of last Friday, which really would have been as of the prior Tuesday, because the COT data, CFTC releases that every Friday with the exclusion of holidays, and it's as of the prior Tuesday's data. So we didn't get it until Monday. Remember, I mentioned to you that my clients and I went long gold. I think it was on Monday and Tuesday. Well, part of that message was because what we were seeing inside of the COT data, that wasn't exclusive to them, meaning what commercial traders were doing. There were other patterns that we took a look at, which I have not shared with anyone on air yet. My clients know about it. It's a really unique way of taking a look at what gold is doing out there. It kind of clarifies things. But what we do know is that the large commercial traders were anticipating that gold was going to move higher. The next move in gold was going to be to the upside, not the downside. Now, you can also get currency information from them, but it takes a whole lot more work to really put that together. You can go take a look at the U.S. dollar index. They do show that, which I do. And what was interesting is they, inside the commercial traders, which is really the group we like to pay attention to because they typically give us the best information, not to be used as a timing scenario, but they in essence, we're doubling down, right? We saw that gold, they were saying gold was going to move higher, which it has. They were also saying that they were getting net short the U.S. dollar index. Now, you got large banks, large traders out there. Certainly that came to fruition. So what actually took place yesterday in the market with regard to the euro out here, you and I took a look at the two prior days candles that said, this is interesting. It's back above, it had rejected a swing point out there. So a lot of what we're taking a look at, and this really goes to, I see an email here from a Joey saying that clearly that Draghi opened his mouth for more stimulus, and the market has skyrocketed, and that this is how major market tops form. In essence, that's just kind of a summary that's out there. And he may be right. But, what I want to do and what I think that each of us should do is just kind of stay within the market that we're in right now, which is a real sideways trading range-bound type market, and pay attention to the shorter-term signals. And if the market starts going in your direction, whichever way that is, don't get to start to really focus on the charts and look for the trouble ahead, because assuredly there is going to be some trouble ahead. Look for these other signals out there. So in the case of gold on a daily basis, we've had a nice move today. You've had some nice volume behind the move. What it hasn't done is it hasn't been able to clear the resistance zone of its task market profile, which is at 1091, both on a weekly and a daily time frame out here. So, there's going to be a battle that's going to occur at that 1091 level. I will make the assumption with appropriate stops, but I'll make the assumption that gold's going to be able to bust through that level and get up to about 1117. If it can clear 1117, then we'll see where it goes from there. But you got to take this one step at a time. Dow's up 330, S&P's up 36, Composite up 91, and we'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So as we cruise into the final segment here, we've got a mixed message from the 4 indices that I'm tracking here for us: the New York Stock Exchange, the Nasdaq Composite, the Dow, and the S&P. The New York Stock Exchange and the Dow tell us that it is still the sellers that actually have control of the ball. What do I mean by that? If we take a look at the New York Stock Exchange right now, the very bottom panel of my screen out here is the advanced decline oscillator reading, and it's below 0. And when it's below zero, it tells you that the sellers are in control of the market. The reading right now is minus 51.91. As Maria was pointing out, we can see that it's an inside day here, says that the trend of the downside continues. So that's the message of the wider swath of the market, the New York Stock Exchange. However, if we take a look at the NASDAQ composite, boy, that 50-day simple moving average is getting very close to the 200-day, very close to a golden cross out there. It's not in place, but we can see that the price oscillator is above zero, slight positive reading. Even if with it being an inside day, it says that this one goes to the presumption of who's in control of the market. That goes to the NASDAQ composite, the bulls out there. So we've got one for the bulls, one for the bears. If we take a look at the Dow has been the one that has been struggling the most here over the past couple of weeks. Its price oscillator, not a price oscillator, but its advanced decline oscillator, is in fact also negative, slightly negative out here. Inside day there says that, you know what, even it's still the sellers. We're really back to where we were on Monday, as you and I took a look at the what we've done for the week out here inside the indices. So that says it is the sellers in control. Yet, as Mark and I were taking a look at when we were looking at the VIX index, as he pointed out, was that when the VIX index is trading below the 50-day exponential moving average, which it is as we speak right now, that 50-day is priced at 1708. That's why I was able to give a price projection of about $14, $14.09 if we're going to be exact. That's where I believe the VIX will trade down to. But as we take a look at and therefore inside the S&P 500, to be clear, when the VIX is trading below the 50-day, I use that as one of the tools to tell me who is in control of the S&P 500. So we're basically split here. And when you're split, if you're not in a position, that is called being in a position out here. If you are in a position, make sure that you are using stops, that you have profit targets, and you just simply take them when the market gets there. There is nothing that exists in the market today, tomorrow, next week, the week after that, and perhaps for the next 4 or 5 months, that the market is going to do anything different than it has for all of 2015. And if that's the case, how would you go ahead and trade the markets? That's really what I think you need to get your head wrapped around, is that this is a two-way trading market out here, and we're in some type of range with very low volatility. And I use that by just simply taking a look at the volatility index in the price range that it's at. And that just says make sure that, and that says you got to go down to shorter term charts. Find the ones that are working for you and just simply stick with them. And as Maria did, be willing to take your profits off the table. Look, none of us know what's really going to happen tomorrow. This is just simply a probability game. But let's use the probabilities to our advantage. And that's what I call mastering probability. So you can check out my newsletter service called Mastering Probability by coming to the homepage at TFNN.com. You can check it out for the next 30 days. At a minimum, you will get an education. But, of course, we are up by 12% on the year out there. So hopefully I can help you make some money as well along the way. So, folks, have a fabulous weekend. And stay tuned because our man David White is up next. Then we got the Tom O'Brien Show from 3 to 5. So I look forward to seeing you on Monday afternoon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.